Arundhati Bhattacharya, Chairman at SBI, joins us on the show right now. Ms. Bhattacharya, good afternoon. Good to have you on the show. Firstly, your reaction on the RBI policy, status quo on key interest rates, but SLR being cut by 50 basis points. Does it come in as an expected move, or were you surprised by the SLR cut?
You know, this was a surprise. We were not expecting an SLR cut. But having said that, I think it's a positive thing for the banking sector also. It does release resources, though maybe for SBI it doesn't make too much of a difference right now because we had excess SLR. But going forward, in case the growth picks up, then obviously, you know, it is something that is going to release resources and enable us to take care of the credit demand. The other thing I think that it also signals is probably the fact that it is being expected that the government borrowings will not need to be as much as it was last year, and probably therefore the fiscal deficit figures would be below what is being projected this year. Again, this is of course just an interpolation of what it could mean, but I believe, you know, this could be possibly one of the other reasons why the SLR has been lowered.
Right. Ms. Bhattacharya, most of the PSU banks currently are sitting on surplus SLR. So even the SLR rate has been slashed down. Right. Some would argue that, you know, it's not going to change anything materially for any of the banks or for the banking industry per se.
No, that's what I said. You know, it's not something that will have an immediate effect on a bank like SBI. It will definitely not have an immediate effect on us. I do not know, maybe some of the smaller banks who have lesser SLR, for them it might make a difference. It won't make a difference for us. But what will make a difference for us is the export credit refinancing, where the amount has been cut from 50% to 30%, and that amount has been made available on the term repo window. As you know, the term repo window will be costlier than the export credit refinancing window. But I think what the RBI is signaling over there, and I think they have begun signaling this quite some time back, they do not want the treasury management, the daily treasury management of the banks to be done through the repo window and through the export credit refinancing window. So over a period of time, they are pushing us towards the term repo window. And if that happens, then probably the facilities will give to corporates also in the cash credit area, where corporates also can draw for a day, and therefore their treasury management sort of also devolves onto us. Maybe the banking sector also needs to look at those products and see whether those products can feasibly be carried on. If for us also it has to be more of a weekly management rather than a daily management of the treasury.
So, Ms. Bhattacharya, I mean, when it comes to particular segments like, you know, an interest rate cut in, say, home or auto segment, do you think that is a possibility at all, or would you negate that completely for now?
I don't really see any scope for this. Of course, you know, unless the ALCO meets and we take stock, it's very difficult to give you a definitive answer. But I don't really see any scope for that at this point.
Okay, we're getting a reaction from the finance minister as well, and the finance minister has reacted to the credit policy. According to the finance minister, the RBI policy is a very calibrated approach with one eye on inflation, other eye on growth. Well, according to the FM, the Reserve Bank of India has done a great job in managing inflation and growth dynamics. Ms. Bhattacharya, do you think in the short term, transmission of credit policy or transmission of interest rate cut could be an issue? I mean, even if we get 25 bips or 50 bips, given the way how the growth dynamics are moving, what is happening to the deposit growth for most of the PSU banks, in the short term, rates are unlikely to go down?
See, in the short term, I would say rates are unlikely to go down because, as I said again, where will the impact come? At this point, I can actually see my cost of funds going up a little bit. If I am not able to release the SLR and there is very little credit demand, my income side will not get impacted. So where will the rate cut come from? I don't think that was the intention of RBI either. But what RBI probably is signaling is that they are seeing credit growth in the future, and therefore they are releasing resources of banks that could be used for that credit growth.
So what is your own projection, Ms. Bhattacharya, when it comes to the first quarter for SBI? How much credit growth do you think you'll be able to cough up?
Actually speaking, I have already projected the whole year at 15–16%. We are not seeing anything more than that at this point of time. But you know, we are really on the cusp of a lot of policy changes. Therefore, it's, I think, a little pointless to try and make projections at this point. Maybe another 3 months down the line would be a better time for us to make a further projection. And we have therefore, you know, during our meetings with investors also, we have very clearly said that we'll come back and review our projections. At this point of time, we are sticking to the 15–16% projections.
So you won't be tweaking your deposit or lending rates at all?
I cannot say that till I have met with the ALCO. But at this point, it looks a little unlikely, yes.
But, you know, Ms. Bhattacharya, you know it more than anyone else that the demand of credit is not a function of low cost of borrowing. It is also a function of policy regime. It is also a function of confidence. It is also a function of animal spirits.
That is why I am telling you, no? Absolutely.
No, so
absolutely. That is precisely why I am telling you that we need to review this in 3 months' time.
Is there hope? Are you getting some more inquiries after 16th of May? Are things looking up? I'm just trying to gauge the real mood.
No, the mood is very upbeat. Let me tell you, the mood is very upbeat, but there are a lot of expectations. And those expectations, you know, obviously the government is also very aware of those expectations, and I'm sure they are doing things to meet it. The mood overall, I must say, is very upbeat.
The turning point for any bank is when bad loans, they start becoming good loans. When will that turning point for SBI come? Again,
very difficult, you know, you cannot pinpoint it that way. I had already told you all earlier also that 2 things need to happen. One is that the GDP itself needs to start growing so that the demand goes up, the revenue goes up, and therefore the profits and the cash flows become better. The other thing is, of course, the capital markets should open up so that people are able to raise equity and thereby deleverage. Also, you know, as sentiments become better, there are assets that are on the market but which are not buying, not seeing any buyers. So people start getting more optimistic, and therefore the buyers come back into the market. Private equity gets back into the market. So you know, it's a cycle. I think the cycle has just begun, and we have to allow it time to gather speed. It's not something that will happen in a week's time. It's something that will happen over a period of time. So you have to allow it to gather speed, and then only you will be able to understand how and when things happen. Again, as I said, you know, to exactly pinpoint a time or a date is not on, because it's not really possible for anybody to predict that.
Ms. Bhattacharya, one final question from our end. The Reserve Bank has already started removing some of the forex-related curbs. With stability now coming in, do you expect some more curbs to be eased?
Yes, it's more than likely, you know. It's absolutely likely that those curbs will go. And we have already seen a raising of the remittance limit. So that also might go up even further. And that is very much on the cards if the flows continue the way they have been happening.